Hey, it's H here. Today we're taking a look at technical analysis for Tesla, and I'll be covering the wave analysis with the Elliott Wave theory. Let's jump right into the charts. So last time on Tuesday when we were covering this before or previously, the idea was that we had something like this, where we had a W, X and then looking for wave Y. As this is a double correction, the expectation for wave Y again is a 3-wave move. However, as we had this labeled as a 5-wave move, this means that this is the start of something. At this point again, I've labeled this as wave A and ending the possible wave A completely at these lows. Then we would be looking for a wave B here in 3 waves, and then another 5-wave structure for that wave C to complete the wave Y, creating this ABC zigzag. On a smaller time frame, the idea was that we were looking at an impulsive count of the lows. Here is the Tuesday lows or Tuesday area where we are actually, it was probably around here where we were looking at the long setups. So let's bring that out. And the idea here was that we had a potential 5-wave move here into a wave 1. This again was either a wave 1 or wave A, does not really matter at this point of the analysis. Again, a 5-wave move starting something new. Then we had a potential ABC extending to the 1.236 extension of the A wave for that C wave, and what we had there was the first target of a long setup. Again, as we had a 3-way complete here, this was the first start of, or basically the first entry for a long. I had a long here as well on these lows, and I was going to be adding at the 0.5 and the 0.618 here as well. However, the price never got there. The reason why I did not go full position into there was the reason again because of time. If we are comparing this wave 1 in time compared to this wave 2 here, we see that wave 2 is relatively small. It is possible that it is actually so small, but again, more probabilities would be that we were creating a smaller some kind of retracement up and then another 3-way structure coming down, and would be finishing before the 1-to-1 extension in time. So again, that was the reason why I did not go full position on that, but instead again I would have liked to add more size on that position at the 0.5 and the 0.618. But again, that is just my way of getting into those positions. Again, the invalidation would be all the way down at these lows at that point, so the risk was still there. Again, there was a possibility of this being a wave C of this ABC. So again, or of course it could have been something else, and this was not a 5-way move at all. But yeah, that was the idea there. After the wave 2 was put in place, we had a potential 5-way move here into 1, 2, 3, 4 and 5. I've labeled this as a smaller degree wave 1 here on the more bullish count, because again, we did not hit the 1-to-1 in price. This generally tells us that this is a smaller degree wave 1. If it had hit the 1-to-1 in time, in price, then we would have been looking at the more ABC structure. But still, it is possible that it is a smaller degree wave structure like that. Now, if we are comparing the wave 1 length into this structure here as well, we can see that it is clearly smaller. The 1-to-1 in time would be all the way down here at Friday, and it finished actually Thursday. So there is definitely a lot of time here that we didn't use, and that is another reason why I do like this as a 1. Since then, again, of the top wave 1 here, we would have this as some kind of A wave, B wave, C wave, getting that very nice 1-to-1 confluence of these wave structures, creating that ABC. There is of course a potential where this is still another ABC going up, and then we would be crashing down for another entry possibility in here to go higher. However, again, we'll see about that later on, and if that is worth at all. If we are comparing this in time, we can see that it is actually already hit the 1-to-1 in time here. So generally, we don't want to be seeing that the price goes beyond this 1-to-1 for that wave 2, at least too much, because again, at that point, it starts to remind us more of a wave B, and the probabilities for this being a wave 2 instead of wave B is going lower. But that is the impulsive wave count. So let's check out the ABC scenario, where again we were talking about on Discord. MRS pointed out as well this possibility as well, where we had this as a potential ABC finishing up already. Again, we did not hit the 1-to-1 here. If we had hit 1-to-1 all the way to the 1.382, this was the bearish idea of this ABC. So if we had hit the 1-to-1, or basically $201 to $209, then I definitely would have most likely shifted my bias more towards the bearish idea and looking for short setups here instead, downwards. At the moment, I don't have any shorts opened here. And yeah, this is still the reason why. Again, just based on the extension in time. Also, generally, when we are looking at an ABC, we see the wave A being more impulsive than the wave C. Here, the C wave is somewhat more impulsive looking, or at least they look. Let's actually check out the angles here. Which one of these is this angle? So that's 51, and this would be 65. So the C wave would be way larger or way more bullish in this scenario. Generally, we want to be seeing them otherwise, or the other way around, where this is more impulsive than the C wave. But again, that is not making it any less possible. That is still possible. One thing that goes against this is that, again, we would have this as a three-way structure. That would be the start of something new. And if it is a start of something new, it is more looking like a corrective structure than anything else, and not a continuation of the previous trend where we had these as an impulsive wave structures coming down. So that's the idea here, and the reason why I don't prefer this as an ABC as much as the impulsive wave structure. Now, if we are just zooming out with the impulsive count here, and trying to, let's actually bring out the target here for that wave B, we would again be expecting a three-way structure into that wave B. If this was a wave 1-2, 1-2, then we would need to be getting a 3-4-5, 3-4-5. And at that point, again, we are already retraced quite a bit of this whole thing. At least probably around the 0.5 retracement, if we are just realistic. And that would be around $240. Again, as we are expecting a wave B here, we would have to get a three-way structure coming down and then another five-way structure going up for that creating of that ABC for that B wave. And that would be kind of deep. Again, these bear market rallies, I don't think they should be getting that deep before, again, the attempt of going lower. So we might need to be looking at the higher time frame and see if there is a possibility where we could actually end something here. I don't want to be overly bullish because, again, my expectation on the indices is still lower. But again, we definitely need to be looking at these structures here, seeing if we are getting these extensions here on these lower time frames or not. But again, it still is looking very good for the bulls, or at least on the smaller time frame. But I think that is going to do it, and the reason is of what I'm thinking. So if you made it this far into the video, I would appreciate the likes. Link to my free Discord server in the description below. And for now, I thank you for watching and hope you have an amazing rest of your day. See you next video. Bye bye.